You all pretty much know our names, but if you haven't been here, I'm Tony.
I'm Brandon.
And our topic is money industry, which is basically financial institutions. And we're going to talk about what different financial institutions are, the bad things that they do. That's basically it. So what makes up the money industry? Like I said, all financial institutions. There's different types of banks, insurance companies, brokerages. We'll all get into detail about that, right?
And these are just some of the main ones. There's still more financial institutions out there, but these are just kind of the main ones, some of the main ones that people deal with most day to day. So we put them on here. All right, so there's two different types of banks. The first one's a commercial bank, which is just like your average bank, and which they accept deposits and provide security and conveniences to their customers. The original purpose for banks to come around is to protect people's money, because clearly you always got that like criminally insane person who thinks that all their money's safe underneath their bed. That's not true. Because if your house catches on fire, somebody breaks in, all your money's gone, you have nothing. Banks are here to protect that, so if that would happen, you still have your money. And that's why commercial banks started.
Well, does anyone know any commercial banks just right off the start that you guys deal with
PNC.
U.S. Bank, what?
PNC.
Yeah. So there's a ton. We got two examples here in case you guys did not know what commercial banks were. There's two examples. All right, investment banks. They used to be with commercial banks. They used to be the same thing until 1933. They split up. And then, like he said, commercial banks are more of like day-to-day people using, just keeping their money safe, not throwing money in their mattress. This is like more for investments. Their primary role is to help corporations get more capital. And at the bottom, they do more than just that. They do plenty of things. At the bottom, it shows like making markets, facilitating, acting as a broker for institutional clients. This one's harder to know any examples. Do you guys know any examples of investment banks? Because I did not before doing this.
With like an Edward Jones, or is that just like
That'll come up later. It's not under this one.
I think Wells Fargo kind of has
Well, I don't know for sure. But our two examples were those. Do those ring any bells?
no?
Not for me either.
All right, so everybody probably knows what insurance companies are. Everybody deals with it, whether it be cars or probably DJ and Andy here with houses and medical insurance and stuff. I don't deal with that. My parents do. So I'm not 100% sure on all that stuff. But insurance companies pull risk by collecting premiums for large groups of people who want to protect themselves and or their loved ones against particular loss, such as a fire, car accident, and illness. So an example of this personally is I ran into the back of my friend with my car. Well, since my parents have nice insurance companies that protect me, I didn't have to pay anything. And even though my insurance went up and my parents weren't happy about that, it was better than them having to pay for it.
Examples of insurance companies. These ones are easy. They're all over commercials. Yeah. Jingle. These ones have a lot of jingles too. Yeah. We got Progressive. We got Allstate. Flow, and that one guy with the deep voice. All right, brokerages. I didn't really know what these were before this. They're basically there to help facilitate transactions. Trying to think. Oh, we have an example right here. When a trade order for a stock is carried out, an individual often pays a transaction fee for the brokerage company's efforts to execute the trade. That's kind of like, it's easier for me to understand if I pretend they're like real estate agents, and when you're trying to buy a house, they help you with that, help facilitate that transaction. Do you guys know any brokerages? Scott Trade.
Ameritrade.
Oh, Edward Jones.
Yeah, there you go. Edward Jones. All right, and savings and loans, or thrifts. They were used a lot in the 1980s before savings and loans crisis, which we'll talk about later. They were used a lot back then because they could offer better rates than commercial banks were, better competitive rates. But now commercial banks are kind of used way more often. But people still use these and everything. And savings and loans is pretty self-explanatory for what they do. I'm not going to ask you guys if you know any because we only got one example, and I didn't even know that before today. Belmont Federal. Anyone knew it?
Our credit unions, like me personally, I'm not part of a commercial bank. I used to be part of Chase, but I deal with like a credit union because of my parents because they work at Honda. But credit unions are like banks, and when I say they're like banks, they're not like investment banks. They're more like a commercial bank, and they do the same things commercial banks do, except for you have to be probably part of that organization or that credit to be part of a credit union. Like I'm part of a Honda Federal Credit Union because both my parents work at Honda. So if like you don't know somebody who works at Honda or you don't work at Honda, you can't be part of a Honda Federal Credit Union, whereas anybody in here can be part of like a Chase Bank. So credit unions are just like a small version, a smaller, like, it's like, what's a golf club? It's like a country club kind of thing, like, I mean, I'm not fancy, so I don't know anything about country clubs, but that would be an example of credit unions. And then, does anybody would know example of like a credit union?
St. Joe's is a credit union in my town.
Okay.
Jeep Country.
We just have on here Honda.
That is one part of it, so that's all I know about it.
All right, now we're getting into what these financial institutions do that make customers and consumers pretty mad. We wrote down charging for checking, funds availability, manipulation of transaction orders, or overdraft protection faults. Those are just four of like kind of like the main tiny things that like piss off customers. The one that that stood out the most to me was manipulation of transaction orders, because I didn't know that happened before researching this. And what it basically means is if I were to go out and have $300 in my checking, and I went and I bought a pencil and a case of water and a PlayStation, PlayStation's obviously going to set me over that $300 mark, so I'm going to get that overdraft fee. But banks manipulate it and put the PlayStation first, then everything else, so you get charged 3 overdraft fees for the pencil and the case of water. And my exciting night for the pencil and the case of water. Anything else like that?
One bigger thing that I found is like with the consumers and banks, have you guys seen the commercials where companies give like this great spiel, like, oh, if you come here, you're going to get the best deal ever, or like kind of like a phone company, if you do it, they'll buy your cell phone line out and they'll give you a great deal. Well, that happens with banking, but some of the most loyal customers are getting screwed over because they're not switching, so they're just giving them bad deals and high interest rates and all that stuff because they're going to stay, and because that's all they know and they're not going to switch. But as they're doing that and they're treating their most loyal customers bad, their new customers coming in are getting great deals, and that's kind of like a big thing I found doing this, that it kind of is stirring up some people.
Yeah, but a lot of these little minor things, if you just look at your bank statements often, you can kind of catch them on your own. But like a major thing was the savings and loans crisis. How many of you guys have even heard of that? A couple of you guys? Yeah, it's like, well, as it says right there, like one of the biggest bank collapses since the Great Depression. And I tried looking up the main causes of it, but there was a lot of things that caused it that they did wrong. So we have a video that explains it, and I'm sorry, it's basically a robot, so it's not the most entertaining thing in the world, but if you listen to what he's saying, he explains it, it explains it better than I ever would.
Saving and loan crisis is one of the largest financial scandals in U.S. history. The savings and loan crisis emerged in the late 1970s and came to a head in the 1980s, finally ending in the early 1990s. In the volatile interest rate climate of the 1970s, large numbers of depositors removed their funds from savings and loan institutions and put them in money market funds, where they could get higher interest rates since money market funds weren't governed by Regulation Q, which capped the amount of interest savings and loans could pay to depositors. Savings and loans, which were largely making their money from low-interest mortgages, did not have the means to offer higher interest rates, though they tried to once interest rate ceilings were dropped in the early 1980s. As savings and loan regulations loosened, they engaged in increasingly risky activities, including commercial real estate lending and investments in junk bonds. Because savings and loan deposits were insured by the Federal Savings and Loan Insurance Corporation, depositors continued to put money into these risky institutions. A complex web of these factors and others, combined with widespread corruption, led to the insolvency of the FSLIC, the government bailout of the thrifts to the tune of $124 billion in taxpayer dollars, and the liquidation of 747 insolvent savings and loans by the U.S. government's Resolution Trust Corporation. One of the largest savings and loan failures was that of Lincoln Savings and Loan, part of the Keating 5 scandal, which exposed the political corruption that was part of the savings and loan crisis.
Alright. When I asked my mom, because I couldn't really figure it out, like how some of this happened, she said that back in the day, when you wanted a loan for a house, anyone could get a loan. It didn't take much to qualify for one. And then people couldn't really pay off those loans, so interest rates were like stacking up and everything, and that all went downhill. Which is why we are going to figure out how to apply for a mortgage, because I had no idea before, and obviously you need a lot more to qualify for one now, so it'd be helpful to figure it out. So let's say that you just bought your dream house, and you've already talked to your lender, you already gave them your name, phone number, address, all the easy stuff, and now you're about to meet with the lender who's about to give you this loan. What are some things that you should bring for him to see?
Pay stuff.
Just shout them out.
You're putting your tax information.
Would you need insurance information?
Doesn't hurt.
Banking information? Banking statements, I guess.
Yeah. That all we got?
You need like your social security at all?
That he kind of already knows that from initially when you gave him your phone number and everything, but that doesn't hurt. Nothing else? Alright, we're gonna play a video that talks about it. The video is really small, I must have to do this. Alright, screw it.
After finding the right home and negotiating a price, or determining that now's the time to refinance, you're ready to apply for your home loan. You can begin the process over the phone or in person. Your lender will ask for information like your full name, social security number, address, and phone number. They'll want to know where you work, your income, and the value of your assets, including your banking, retirement, and investment accounts. And they'll need to know how much you're spending each month on things like housing, credit card payments, or loans. If you're renting, you might be asked for your rent and landlord's information. And if you're purchasing a home, your lender will need to know the address and price. Most lenders will also require some common documentation that you need to provide within several days of submitting your application. This includes a copy of your most recent year-to-date pay stub, your last 2 W-2 statements, signed tax returns from the past 2 years, or a copy of your most recent profit and loss statement if you're self-employed, plus recent bank statements for all of your accounts. If you're buying a home, you will also need a copy of the signed purchase and sales agreement, and if you're refinancing, you will need your most recent statement for your mortgage and your home equity loan or home equity line of credit, if applicable. Once you send in the required documents to your lender, you will typically receive a loan package which contains some important documents for you to review and sign. Look for the good faith estimate, which is an estimated list of your fees and closing costs, and the truth in lending disclosure, which outlines the credit terms of your loan. You will also find a request for a transcript of your tax return, which you will need to sign and return to your lender to complete the loan processing. After receiving all of this requested documentation, your lender will begin the approval process. Keep in mind that it does take a few weeks, and that you may be asked for additional documentation in order to be approved. This may include information to further verify your income and assets or proof of homeowner's insurance. To ensure your application goes as smoothly as possible, just remember to work closely with your loan officer and stay organized. Here are some things to keep in mind when you're applying for your home loan, including the types of documents you'll need to provide. And remember, you can always talk to a mortgage loan officer to help you complete your loan submission on time. To learn more about applying for a home loan or the home loan process in general, check out our other videos, informative articles, and helpful tools.
Alright. So yeah, I thought if you wanted a loan, you just go to the bank or wherever and say, I need money, I'll pay you back. But you actually need a lot more. I printed out a ton of stuff like that that you'll need when you apply for one. It's not like you guys are going to do this tomorrow, but it's just cool to know because I had no idea. And why wouldn't you want more knowledge? So, other than this, we really got nothing else for you. You guys got any questions? No questions?
Did you see anything in your research about pre-qualifying for loans? Did that ring any bells? Yes, please. Pre-qualifying.
I'm just going to assume off the word it's before you qualify.
Right. Good clue.
If there was multiple choice, I might get it. I can just turn this in tomorrow. Okay, yeah. Because I'm just carrying it back my room. I looked at it and I was all scared.
Yeah. No problem. Okay. All right. Well, has anybody ever heard about